I'm very prepared for that event this week, and yeah, I did some checking, and it will be next week on Friday. The consensus is not yet there, it's just a previous figure. So, there's a lot of time to prepare. It's always on the first Friday of every month, so it should have been tomorrow, but sometimes things change, so there's a lot of time to prepare for that event. Even sometimes when you seem not to be excited about it, as the day comes nearer, you start feeling the excitement somehow, and when the day reaches, you end up putting in some trades. So it will be next week, and hopefully it will be very predictable. The Euro USD is already very, very bearish. It's very bearish. There's some serious move that's taking place, which is good. So that helps us prepare for next week, Friday. So if we start having some kind of support, or whatever it is, we shall be very ready for that event next week. If the figures are actually very good, if the consensus is very far from the previous figure, then we shall have an actual figure that is within that range. So it will be very predictable. It would have been tricky today, because that information for the non-farm payrolls normally for the previous month, which means tomorrow, if we're having non-farm payrolls tomorrow, then the data collected would have been for September, and that data would have been running up to today, which means the consensus wouldn't be really accurate, because the consensus is normally done by many other analysts and statisticians, and the actual figure comes out to the actual bodies and the actual authorities that are in charge of giving us that information. So when these government bodies have, for them, they have the time and the resources, and they have access to all the information. So when they get those figures, collecting them up to a day like today, then they announce tomorrow, that doesn't give the other independent analysts the time to get a proper consensus. So normally you will get figures that vary, but now that we have a whole week, because this month is ending today, then the next month begins tomorrow, so they will have some good time to collect their data, do some research, cross-check. So the consensus is most likely going to be very well researched. The figure will be very nice, close to the actual figure. So when the real figure comes out, it will be predictable. It will make the chart predictable, because we shall be expecting something close to the actual figure. So that is one advantage with with the non-farm payrolls of this time. That's one big advantage that we can bank on. If things go wrong, then it will be something else. But it's a very big advantage that there is enough time to do research, and then you get the actual figures. If you look at the previous announcements, normally when the non-farm payrolls are very close, if the week is ending like on a Thursday or on a Friday or even on a Tuesday, so when the week is ending like on a Thursday or Wednesday or Tuesday, then there is little time for the consensus to actually build up. So not right now that there's enough time. The week is ending on the month is ending on a Thursday, then tomorrow a new week begins and a new month. Then all that time to the next Friday next week, there'll be enough time for the people who are getting that information for the consensus to actually give you a well-researched figure. So that is one advantage to that. So that is all within fundamental analysis. So sometimes in Forex it's good to to hit the pause button, or to hit the reset button. It's good sometimes to somehow start afresh. It's good to empty your head, then you go back and start afresh from the basics, so that you sometimes you get derailed by so many things. You get derailed by different platforms, different charts. You get derailed by people posting very big profits, and you want to go into that, and you can lose your balance somehow like that. So sometimes it's good to hit the reset button. I've been talking to some people who had just started trading, trading with even robots. And when you're starting, even with all the determination and dedication, you can lose money. You can lose a lot of money because for the biggest part, you really don't know what to do. You're convinced that that you want to trade and you want to make money, but actually trading and doing the actual making of the money becomes a very big problem. So it's good to hit the reset button. You go back over the basics. It doesn't even take long. It takes a very short period of time to go and revise everything that that will build your trading character. Because character is something that is different from everyone. We all have different character as a result of a million things that are there in this world. So if even traders develop different trading character. Some people are scalpers, other people are very big risk takers, others have a lot of fear, so their risk is very low, trade once in a while. Others are skeptics, others are enthusiasts. So everyone has a trading character, and that character normally is where it comes from. You don't know. You just realize that you might be very greedy. You want to make too much money in one day, and you end up losing money, or you end up getting so angry because of the charts. So it actually builds and brings out some character in you, which you can identify as your trading character. Now that, there's nothing wrong with that. So you have to actually work on it and improve it from time to time, so that you find your place in the market. Because if you don't know where you belong in the market, you don't know if you're a scalper, you don't know where you belong. You just get into the market and you just do whatever you want. Sometimes you might be a one chart person, person who trades only one chart, and there is totally nothing wrong with that. You can trade only one chart and make a lot of money like that. So there's nothing wrong with trading one chart. If your chart is let's say the Australian dollar versus the US dollar, if that is your chart and that's the only chart you trade, then someone comes and tells you, me, I'm trading platinum, I'm trading silver, I'm making money, then you will leave your chart, which which you've synchronized with, and you're going to try to make some money on that chart because they've told you that chart makes money. And then when you land there, problems come, because you're used to analyzing on this other chart. Then you're going to do the same analysis the other side, and when things go bad, you talk to that guy who showed you that chart and ask him, how do you do it? The guy tells you, man, sometimes you win, sometimes you lose. Life is like that, blah, blah, blah. And, it's very frustrating. So when you get your comfort in Forex, it's a very volatile business. It's very, very volatile. Okay, it's volatile when your risk is high. When your risk is low, it is hardly volatile. But it's very volatile and you can lose a lot of money. So where you find soft landing, that's where you should concentrate. Don't go for, people will try to, show you what they're doing. If they are comfortable where they are, then by all means, you can move like that in parallel lines, and then as you make your money, because the moment you shift from what you know and you move to something else that you don't really know, then things go bad. And also that also matters when you're trading Forex, then trading binary options. I think the definitions for these types of trading, they haven't yet been well defined. When you're trading binary options, you have the Forex charts. So binary options, in a way, is also Forex trading. And when someone is in binary options, they will say they are Forex trader. Then someone who trades on the MetaTrader platforms will also say that they are Forex traders and they have these charts and blah, blah, blah. And, but these are two different worlds. Binary options, you have an expiry, a time, a limit for every option that you enter. So by the time the time runs out, you're either above or you're below the time when you decided to put in your trade. So it's different from Forex, because Forex, when you do the analysis, you can stay within a trade for as long as you can hold it. It doesn't matter if it's a year or 2 years, But binary options, you have very short options of about I think the smallest I've seen is about 10 seconds. You have 15 seconds. You have a minute, 15 minutes. So you have different options, but that time limit, if price is not above where you decided to buy, then you lose that chunk of money that you have put. And that is very different from Forex. Forex, you do analysis, and the day your analysis actually plays out, that's when you start earning money. And for binary options, once it plays out against you, then you go in for the next option, like that. It's kind of a high speed, it's high risk, high reward. It's very it's very volatile, more than Forex, but it's also very interesting. The only thing that makes binary options not so much fun is the fact that you can lose money very fast. And the more money you lose, the more the less you trade. And when you put in a demo, the demo is not like the real account. It's not like a real account for binary options, because for the real account, you're on real pressure, and you're risking real money, and every time it reduces, you have fewer and fewer options that you can enter. But for a demo, you can keep on replenishing your account, and you will keep on trading. But the fact of the matter is, with binary options, you really have to be you really have to know what you're doing, and you have to be very calm, more than Forex, because the more volatile the market is, you have to find a balance. So when the market is very volatile, you have to be very calm. Just like that. Or if you're very, very volatile, you yourself, then you need a calm market, so that you balance that out. So when you go for these very tough charts, it's a disadvantage to you. It's a very big disadvantage to you. So you have to find a way of finding that balance between yourself and the market. Another thing, I think I've talked about this before. It's not okay. I'm not talking against it, but it's not very good to borrow money to invest in volatile markets. It's not good. I think many people advise against that. Borrowing money from especially money lenders. Money lenders have some serious profit that they want. Sometimes it accumulates daily, sometimes weekly, and the more time goes, the more pressure you're on. You find someone has put in a trade and he wants money, looking for a trade that can give him money, focused on that, and you don't get enough time to think. You're on pressure because of the money lender. You're on pressure because of such things. And then it's bad. It doesn't give you a good trading environment. Even when you borrow money from friends and family and whoever, and they're all looking at you, waiting to see what's happening. Then when you're pitching the idea to go into this, it's all smooth. But when it comes down to actually doing it, that's where problems start. You start having self-doubt. Even those who gave you money will start having doubt in that moment of truth. So it can also burden you, and when you're trading, your mind can be split between you can be split between doubt and what you actually believe is going to happen, and all your hopes and what you're trusting in. So you can have so many doubts, and your mind will be split into so many things, and you will lose your balance. You may not be able to do proper analysis. You might become very emotional, very stressed, and you'll start entering trades that may not give you money. And that is something dangerous. So your state of mind really matters. If anything, your state of mind matters more than your account balance. Your account balance, and whatever you're doing, you need to have a very clear state of mind. You can't put a price on peace of mind. You have to really be in the right headspace when you're going to trade, because things will go bad. It's not like doing manual work. Here you're actually using your head to do everything that's there. And you really need to be sharp. Your mind needs to be very sharp when you're going to take these decisions, because the consequences are loss of money. There's no other consequence. It's just lots of money. Others will follow that. You know, you can have your friendships, relationships. You know, they can all get entangled inside there. So yeah, it's very important that you have your mind set before you trade. And yeah, so if you just go into the markets anyhow, then it will look like a gamble. Yeah? It will look like a gamble. It will look like you're gambling. Even those who are watching you will say that, you know, this guy gambles a lot. He puts money in those things, those computer things. It's what most people look at the market like. But you know, the market is you know, it's okay. It's there, yeah, and you know, you can analyze the market using a lot of information that you study things over a period of time. Then you have information that helps you to analyze and make proper decisions. So it's not gambling. It is just something that requires a very good understanding of what is actually happening. So when you don't understand what is there, you can easily undermine it. It's like these it's like these mobile phones. You know, these mobile phones. You know, every day a new mobile phone comes out that has new features, good camera, what. But because we undermine these phones, you will get 5 different types of phones, and you will say this one is fake, and you'll throw it away. Now that phone that you're calling fake, first of all, you know, it's hard to understand how it was actually made. You know, there's the screen, there is the touch, that touch panel inside there. There is, you know, you have a motherboard inside there. You have a camera. You know, it takes some genius process to actually make that. Now, for the end user, you get it, and it's just, you know, it's just something, something that is, you know, you can easily undermine. But you can't undermine the science behind it. It's just like the market. As the end user, you look at the market and you can easily, you know, you can underrate it. But the science behind it is extremely complex, and the people who are behind it are also very complex people. So, you know, it's not good to undermine things which are, you know, which are very powerful, because, you know, it's like you're undermining your own intellect. So it's good to understand everything that is there before you undermine. At least just rate it based on what it is. You can rate different types of trading. You can get the Forex trading, you can get binary options trading, you can get I think trading futures. It's also somehow unique. Trading futures, so you get all those, maybe also indices, because indices, let's say the stock market, the Forex market, then indices, because the stock market is based on companies, Forex market is based on countries. Indices have a combination of so many companies inside there, and, you know, so many things inside there. Then you have futures, which are also very unique. Then you have binary options. So these are all financial markets. So if you understand all of them as a whole, the way they are, then you can start, you can put each one of them on a scale and see which one you can undermine in relation to the other. But at least, you know, it's good to first appreciate, what is behind it, so that, it's not good to undermine things. You can even undermine medicine, because you don't know what it has taken to make that medicine. You just look at it as a pill, and you say that, this pill, this is useless stuff, this, you can have all sorts of, theories behind it. But when you understand the science behind it and the machinery that it takes to actually build it, then you can start to appreciate what it is. And, when you appreciate something, then your mind is open to possibilities that you can profit from. But when you undermine something, then it won't help you, and, you won't even help yourself, using it. Then you will end up getting stuck using the things that you actually understand. If you understand maybe agriculture very well, then agriculture will work for you, because you understand it, you don't undermine it. But it will work for you if you understand food processing very well. Someone of agriculture who digs might say that that factory that makes cornflakes, me who makes the rice, me who digs the maize, I'm the one who is I'm the one who is doing the real thing. That guy who is doing the cornflakes, that one is just playing around. That one is just, doesn't know what he's doing. But then that person will buy from you everything you have at, at a certain cost. Then he will process it and sell it to you at 100 times the cost that you're going to pay him 100 times for what you gave him. And yeah, that is the circle of life. So when you undermine something, you undermine yourself and you keep yourself at a low level. So it's good to understand everything that is out there and actually take it seriously so that you benefit from it. More complex systems are being made in this world to make work easier for those who understand them. When someone makes I keep talking about tractors. When you're building a road with your hands or building a house, someone who is sharp is going to build a tractor to ease the work. So that person is going to end up building the same thing. By the time you finish one, he has done 100. And then, you'll even come and buy yours, which you have struggled to build with your one hand. And just like that, it's like evolution. The strong come and eat the weak. So it's better to understand, you add to your knowledge, that you also become strong. So that you have a strong mind, you have a strong, a strong way of thinking about things, and you'll end up benefiting from everything. Now, when you get into the market, just getting there is not enough. Staying there is also another hustle. So when you stay in the market, you have to keep sharp all the time. By all means, you can keep, if you watch a YouTube video once about some kind of trading method, keep on watching it. Just keep on reminding yourself about it. It's like doing revision for an exam. Just keep on reminding yourself so that when you get into the market, your mind is sharp. It's very sharp, and you can do so much in the market without any fear. You can have confidence in the system that you're using, so that you don't make losses. You don't just get out of the market. Maybe when you're making a loss, you've reached some point of a loss, and you haven't really done proper analysis. And you don't know if it's going to come back into profit. So you might just get out because of anger or because of fear. Then it reverses. Then you have regret, and that's a very bad feeling. It's a very, very bad feeling. So that is something that must be avoided at all costs. So, it's very important to study. It's important to study about the markets. Just keep on studying and don't stop. Practice. Don't stop practicing. Demo accounts are not there to be abandoned when you start using your real account. Demo accounts are there to be used all the time. Make sure you always have a demo account open and have trades open in that demo account, and not random trades, but trades that you see really, really work for you. So always have your demo account and don't put in any trade, but put in a trade that really works for you, one that you're comfortable with. If you're fearing to put it into your real account, then put it into the demo and let it keep running, so that by the end of the day, you will be filtering out so many trades on that demo which you saw were not entered at the right time. Then when you start entering your real account, you will be entering safer trades because you've already filtered out the bad trades on your demo. So just like that, you keep on improving the way you trade. In a way of, in your subconscious, you keep on improving your subconscious and how you trade. That is a very big advantage. So, like I was saying, undermining things is not good. Undermining a demo account is also not good. Do not undermine a demo account. Take it seriously and, keep on putting in your trades that you see work for you. If you have trades in your real account, then if the other trades you keep seeing in the market, put them in the demo account. And just like that, the more trades you put in, the more you're confident about your trading, and the trades that actually don't work out, you will remember the conditions under which you entered those trades, and you will improve. So I think that's it for today. Let's wait for non-farm payrolls next week on Friday. We shall do proper technical analysis of all the charts throughout the week until that moment, and if it is safe to go in, then we trade the news. If it's not safe, then we sit it out and wait for the next one. So thank you for watching. Have a good day. Goodbye.